I never know if oh, there it is. Okay, good morning, everyone, and good afternoon if you're sitting in the US. So with Kain and I today, we've got Joey Krug, who's a partner at Founders Fund, one of the most influential and globally recognized VC funds. Before that, Joey was the co-CIO at Pantera, which is one of the largest crypto investment firms, and before that, he founded Augur. So, wow, it's quite the resume you've got, and all of this because your dad bought you an old Apple computer at the age of 10. So, how did you end up at Augur? I know that you invested in Bitcoin really early, but what dragged you into the prediction markets?
Yeah, I mean the prediction market stuff. Let's see. I was always super into betting when I was a kid, mostly betting on like horse races and stuff. And then for Augur, it was sort of like the idea of building a prediction market, with crypto wasn't like an original idea. A bunch of people had the idea, but once Ethereum came out, it sort of was like, okay, like there's actually a tech platform where we can actually build this. Originally, we kind of tried building it on Bitcoin, and that didn't really work at all because you can't really, especially back then, you couldn't really do the sort of stuff you need to do to make it work. So that's sort of kind of the short story for how I got into it, and I just always thought they'd be cool for like, it'd be cool if you knew like the probability of real world events and whether they'd happen. Everyone has a weather forecast for weather, but weather's kind of boring relative to like future events you'd actually want to know about.
And is that right? You guys did predictions for everything. You guys did predictions for sports games. You did predictions. Is it true? I read a rumor that you did predictions for the number of people killed in terrorist attacks. You did predictions for everything.
I don't think there are any terrorist attack ones on Augur that I remember, but you could create a market on anything. I mean, it was purely built on Ethereum, so there was no like that we didn't even have the ability to control what people created markets on. Um, but yeah, so there's definitely like a ton of random stuff on there.
Mm.
Some of it stuff no one would be interested in betting on. Like there's some guy who made like a market on like whether his office would eat pizza for lunch on a certain day, and like obviously that guy has a lot of inside info there. So I think that market only had like $100
It's
in volume or
still
something, but
important alpha, right? Important alpha for everyone in the office. So, like, obviously today, we're in this environment, 2024. The election is imminent, and it certainly feels like to me prediction markets have risen to a level of prominence in this election cycle that is like very different, right? Like it's been like a phase shift or something like that in terms of who's talking about it. You've got Nate Silver, who's like all in on prediction markets now, and obviously there's still skeptics, but like what's your take for 2024 in terms of like where we're at for prediction markets? How do you feel about the overall market and how everyone's responding to it?
yeah, I mean, I think it's really taken off. Like if you look at like Polymarket, I forget the exact number, but they've done over 2 billion in volume on the presidential election, and that's especially for one site, that's like sort of like there's probably top 10 betting sites that don't do that much on the Super Bowl. So it's like it's a massive number, and I think the space is going to grow a lot from here because that's sort of what's like there's not that many users in crypto today still. And so I think like if you imagine the amount of people who have access to crypto and who can easily get it, goes up 10x. I think Polymarket probably goes 10x or more. And so I think it's sort of like I think prediction markets have kind of finally broken out of like being this niche thing to being something that a lot of people use, whether they're actually betting on them, which is a small percentage of people, or whether they're just looking at them. Like everybody I know, you know, even outside of crypto completely checks like the poly market odds for who's going to become president or whatever, and that's that was never really true for like Intrade or whatever, which is like the most successful prediction market, prior to these guys.
Yeah, I mean, I've got the poly market odds up, and like it's my third highest browser after like Bitcoin price. Like that's my next go to in the morning. I'm like, all right, did anything happen? Like and like I genuinely, you can sort of I guess make statements about accuracy or whatever, but there is like a relative accuracy in the sense that like if the odds shift significantly overnight while I'm asleep, something's probably happened, right? Like in the same way that like, potentially if you wake up and like BTC's down 10%, you're like, okay, I better go and look to see, sometimes there's no catalyst, but sometimes there is, right? Like, some war issue or whatever. So it's been really interesting that like there is a chart right now that's like real time, that you can watch for like such a major event.
Yeah, it's definitely very different at the moment. Actually, yesterday we obviously had a big event at Infinex. We launched our Patreon NFTs, which was surreal being on the inside of it. I had always invested from an outsider's perspective, as did you. But Kain, this is your second time round. This is the second time that you've got to experience this like really big, at scale launch of a business that you founded. What are the differences, especially going back to Augur and back in kind of 2016, 2017 time, and SNX, which is about that same time? What are the real differences between then and now? Like what did you learn back then that helped you now, and how's the market evolved as a whole?
Yeah, I think one thing that we have tried to do throughout this entire process is break the current meta, which is very like preferential for insiders, right? Or preferential for people who have access or, have already made it, or whatever metric you want to measure that by, and try and, give wide access to a platform that we think, needs wide access, right? Because we need to bring everyone into this tent. If we're going to, seriously shift the market dynamics between centralized exchanges dominating to decentralized platforms dominating, and we're trying to meme into existence this new category, right, which is hard. So you need a bunch of people in the tent to be doing it, and so we've tried to make access as fair and open as possible. One thing I think that's been a bit interesting to me is like people are obviously very focused on meme coins right now because that's the place where they feel like there is some level of fairness or something. Like that's where they feel like the market is, and you can argue cabals and all kinds of nefarious stuff, but like they feel like at least there's not a huge edge for anyone else, right? At the moment, the edge for a private round style fundraising is so huge that people are like, oh, let's go do meme coins instead. What's interesting, I guess, is that like I feel like there's a little bit of the life has been beaten out of people. Like they've kind of gone to meme coins as this like this is the only place left for me, right? But actually, there's some good stuff like Infinex that's trying to kind of shift the meta, and so I think that actually getting people to pay attention to that and getting people to realize that there is a new opportunity, to participate early. Has kind of been harder than I expected. I sort of expected that you would turn up and be like, hey guys, we're doing a fair thing again, and everyone would be like, oh my god, we've been waiting for this. But they're kind of it seems like there's an element of like people are not paying attention right now. It hasn't quite landed. People haven't quite got it.
And Joe, you would have seen this. You would have seen this as an angel back in the day. You would have seen this as a tier one investment firm from Pantera and Founders Fund, and you would have seen it as a founder on the inside. What do you miss from back in the day that we're not doing right now?
I think like let's see, the fundraising environment used to be quite different in the sense that as Kain said, there was a lot less there's a lot more kind of like openness, I guess, in the sense of like also raising funds from the community of people who would actually potentially use the product. And I think like a lot of people sort of think that it's VCs who made it this way. I'd say it's sort of also partially. I mean, some of that is true. Like if you're a VC who has to like own 20% or whatever, but we don't really follow that model. But I think the other big reason is just like the historic regulatory environment in the U.S. with Gensler and stuff has really just kind of like push the market away from that a lot. And I think hopefully, we start to see a more kind of open free market again, because I think it's actually better, both for the users of this stuff, but then also like as an investor, like it's better if you have a large community of people bought into something. Crypto is quite different in the sense that like if you take a private company, like OpenAI is probably not better off if a million retail investors like held stock in it or whatever. Maybe it would be, who knows.
Mhm.
But if you think of something that's like crypto native, that has this inherent kind of network effect of a community around it trading and using it, that actually would be a lot better. Like it's much, you'd rather have a million people own a token than 90% of the ownership concentrated in like 20 groups. So yeah, I'm hoping the market kind of continues a bit back to the old school direction, because I think it actually worked quite well.
It's an interesting sort of hypothetical, right? To run like OpenAI, would OpenAI be better, if it had like a million retail holders, of its equity or something, some alignment, right? Like at the moment, it's got like whatever it is, 40 million subscribers or something, right? Which is kind of the best that you can get in I guess like normal startup world. But I think a slightly different question is like something like Llama, right? That's open source. If people could have some stake in like a Llama based system that was like both open source, I feel like you might attract like open source researchers who would not just have like ideological or intellectual alignment, but potentially financial alignment in that. I mean, that's one of the things that crypto does, right? It creates like this distributed financial alignment. I wonder whether that would allow an open source model to outcompete a closed source model like OpenAI, if there'd be some distinction there.
Yeah, it's an interesting question. I think like if I think for a lot of that, you kind of need to solve like the decentralized training problem. But I do think that problem is solvable. Like I don't there's a lot of people who think it's impossible, and I think it's one of those like it's definitely the IQ bell curve meme, at work. Like the really low IQ people just kind of assume it's possible, and then the kind of mid curve is like that will never work because of all the columns overhead. And then the far right side is like actually, like if you dig really deep, like in theory, there's no law of physics reason this can't work. You definitely have to like change a bit how you train models, but in theory it should be possible. So it'll be interesting to see how that plays out over the next few years.
Yeah, agreed. I feel like there's something there. Like, we're sort of handing over our like meme coin lives to an AI cabal right now, right? But that's one thing. I guess there is another element of AI that's not just launching meme coins, right? Or shit posting on Twitter. There is like the whole doing useful stuff, right? It feels like it sort of speaks to me like the something in the zeitgeist that like AIs have actually found product market fit in like shit posting, like schizo posting and like launching meme coins, but like can't quite like make you breakfast yet. Like we're not quite at like the useful stage, right? Like, or I mean, it depends on what utility you're looking for, right? I guess if you're looking for entertainment on X, they're nailing it.
Mm. Can I ask, is that why consumer is so hard in crypto? Like, it seems to be the holy grail that people want to chase, especially now. We've seen Me Too's pop up everywhere, but historically, it's always been infrastructure that leads the way. It's always been a different layer one or a different way of doing things from really a bare bones smart contract perspective. But very rarely do people focus on the consumer, even though it is such a big honeypot that's just sitting there. Crypto.com, Binance, like all of these guys have done something right, but we haven't quite figured out that critical mass internally on chain yet. Why is that?
Kane, you want to go first, then I'll add on.
I think like I would have had a very different answer a year ago. Honestly, like I would have, and it would have been really dumb. I'm like slowly forgetting all the dumb things that I used to believe. So like I'm not even sure if I know what I would have said. It would have not made sense, right? It would have been like a bunch of cope and like weird things that I had accumulated. I think today what I would say is that like there is an intuition, I feel like, for a founder trying to build in a consumer facing thing, that it's almost an insurmountable battle. Like Binance is just so much better. Like even crypto.com, which is not great, right? Like, it's so much better for a retail user that it's just easier to cater to enthusiasts. And it feels like it's a real market. It feels like a market that you get as a builder inside that space. It's very insular, right? And so you're like, oh, I can build more infra because everyone will get that. I'll build a modular blockchain, or I'll build like a DA layer or something. And, there's a bunch of enthusiasts who will get what I'm doing and why it's like a incremental improvement in the technology, or maybe like a significant improvement. Maybe in some cases it's 0 to 1 improvement. But to kind of shift away from that very insular, enthusiast mindset and look out over at the larger world is kind of petrifying, right? Like, how am I supposed to compete with CZ, right? And so I do think that has had a bit of like a chilling effect of people believe, and that's why, Shane from Polymarket to me is such an outlier, right? Like he's been like this since the beginning, where he's like, no, I'm going to go and get all the users, right? I'm going to go and like do this stuff that's going to like get all the users, and I'm going to take down even arguably a bigger market than Binance. Like he's like, I'm going to take down like all of the betting markets, all of the centralized betting platforms, right? Which is pretty audacious. Like you have to be a little bit insane to believe that, especially as early as he did. But he's always had that belief. And like, I'm not going to lie, there's been moments where I've been like, this guy's just 100% on crack. Like this is not a thing that you can do, but he's just kept grinding away, and he's kind of been able to pull it off. And the argument, I think, from him has been consistent the entire time, which is like, this is better tech at the underlying level. If we can wrap it in something that is more accessible, it will win. Like it almost inevitably will win. It's a big hill to climb, right? And it's taken him however many years to get there. So I think that in my mind is the thing that a founder kind of intuitively has a sense of like, this pathway over here to consumer is really hard. Building more infra, like it's easier to get product market fit. It's going to be easier to get traction. It's going to be easier to get awareness and attention. And so those incentives are really powerful for founders.
Yeah, I totally agree with that. I think it's also like, as you said, it's sort of like daunting taking on the consumer stuff. Like you think about like any startup, there's some startups where it's just tech risk, and if you solve the tech problem, there's people who will buy it. And so I think that's why infrastructure is like a thing that a lot of technical founders in crypto start. And obviously we wouldn't be able to build consumer stuff without infrastructure. So it is good that people have done that. But I think on the consumer side, you also have kind of some element of underlying tech risk, because like the tech does have to work to build whatever consumer experience you want. But then you also just have like this like you versus the world aspect of like how do you actually acquire all these users. And yeah, I guess like Polymarket's example, they focused a ton on product. And then also like Shane's also really good at marketing, in my opinion. If you ever ask him like why Polymarket works, he's always like product. But I hate to also like he's also like really, really good at marketing too. And kind of just knowing what users want. And I think that's like obviously much harder than being able to build the tech that someone wants. Because there's also this like weird like factor that's hard to put your finger on. What a user will like. Users are fickle. And then I think if you look at the consumer stuff, there's obviously some exceptions to this, but most of the consumer overnight successes are not overnight successes. Like Polymarket was a 5-year quote unquote overnight success. Even like OpenAI at ChatGPT, ChatGPT itself was an overnight success, but it ignores the many years that happened before that of R&D to even get to a consumer product that people would actually want. And I guess just maybe a few examples where something like really did just start virally growing. Maybe like Facebook is kind of one counter example, but I think it's actually rare. I think it's usually a long slog before you start to see kind of the viral growth that something like Polymarket or OpenAI has or whatever.
Yeah, I think it's kind of interesting. It's like, social networks are probably one of the things that has like such powerful network effects. You can kind of, drop it in, and if there's any semblance of product market, especially back in that era, right? But, if you go back to like traditional startup land, trad startup or whatever. I don't know. We don't have a term for it. I think there was this wave of like SaaS startups, right? Like, and I remember like YC, one year was like all SaaS startups, and I saw some tweet about it, or like some Wired article where it was like, what happened to like our consumer startups? Like everything's SaaS, and I think we sort of have been in the crypto equivalent of that, where it's like, if you're building a SaaS startup, you've got a built-in audience, right? Because you have all these businesses that need things, and they would otherwise have built it themselves. And people kind of came to this realization that like building some, it's a little bit like building infrastructure, right? Like back in the day, Augur, you guys built a bunch of infra that you needed because no one had built it yet. If someone had already built it, you would have just bought it off the shelf, right? Or, especially if it's open source, you would have just, synthetics was the same thing, right? Like we built so much stuff that today you wouldn't need to build. And I feel like that SaaS explosion was like the unlock of that like, once on-prem became not as big of a deal, and once like CFOs and CTOs were like, yeah, I guess we can have an external chat platform like Slack, sure, why, we don't have to build our own internal thing. It was this big unlock, and people were like, there's a huge market of people you just sell infra to, if you think of SaaS tools like infra for companies. And we've been doing this in crypto now for like, I don't know, 5 years, right? We've been locked in the SaaS era, but then you've got to come out of that, and like someone's got to build something that someone actually buy. Like you can't just build stuff for companies only, right? It's very like, there's eventually got to sell something to real people. So I think it's exciting to be maybe in that phase. Like if this cycle is more about consumer facing things, I think it's going to be more satisfying to everyone. SaaS is fine, but people got bored of it pretty quickly as well. Like, we need consumer stuff.
Yeah. And do you think that so obviously Shane is doing it on hard mode, right? He's trying to get he's got all of the attention but without a token. So do we always need a token, or are we proving that like actually now, even though he's many years into the making and he's finally finding success, you don't necessarily need a token in order to be able to drive people to your platform and drive people to your product? I know that we were speaking about this lightly yesterday, Kain, but yeah, it's hard without a token. It's hard without a price chart to get that kind of attention.
Yeah, I mean, I think like if the product like solves kind of the core pain points well enough, I think you don't need a token, but I think a token can certainly be helpful. I think if Polymarket were to have a token or whatever, I think it would sort of like supercharge them further. Like I don't think I would that very heavily that it would not hurt them. But also it's it's cool that they got product market fit with that one, because there's also this dynamic of like, if you launch a token too soon before true product market fit, then you get confused about whether you have product market fit or not. I think we talked about this. I think the three of us probably in Singapore or something, like a lot of the DeFi stuff back in the day, is a lot of the same people, all of us probably using this stuff, and it's hard to like disentangle what's the real product market fit and what's not, if it's just powered by token incentives. But obviously I think once you have it and you've kind of gotten the 0 to 1 thing, then I think you can definitely supercharge growth.
Yeah, I agree with that. And I think, it's a bit of a Shane love fest, but I think that's one of the things that Shane did really well is he knew what people wanted before they wanted it. Like he anticipated this moment like 5 years ago and kept building, towards this idea of like, this is what people are going. It's one of the reasons, he went to Polygon and everyone was like, what? That's crazy. Like everyone wants, the security of ETH1. And he's like, no, bro, like that's not what people want. They actually want to be able to trade with no fees, right? Like they don't want to think about gas. And so he sort of anticipated a lot of this stuff. And I agree with you. I think if there'd been a token, it would have been a distraction. It's something I've been thinking about a lot, because I think unfortunately we're in an environment where like tokens are almost table stakes. It's so hard to get cut through if you don't have a token because everyone else has a token. And then there's this like weird alignment issue where, if you don't have a token and someone has someone else's token, they're not just gonna let you live and go about your life. They're going to like try and actually kill you. Like they're like incentivized to try and like murder you before you get any traction. And so there's a lot of weird dynamics. I do wonder whether that shifts as we get real users, like if real people start using the tech and it's not just a bunch of enthusiasts, buying each other's tokens. To your point, Joey, like maybe this dynamic shifts and tokens become less of an issue, or maybe they remain sort of a necessary evil to get that like early traction. I don't know. I feel like so much of what I thought about how DeFi should be done and how you grow a DeFi protocol or a decentralized platform has been invalidated over the last year. Like I just don't trust anything anymore. I'm like really in this like epistemological like I'm like I don't know what I know. Like I'm really like hesitant to like believe anything at the moment, and just trying to like see how it plays out, because there's just a lot of stuff that's been invalidated for us over the last 6 months in building Infinex.
It's crazy. I think, Joey, when we first met, it was in Singapore at a token at the top of Tel Aviv, and it was me, you, and David Schwartz from the CTO of Ripple, and you and I were talking. And he's telling us about the early days of Ripple, right? And then you and I went back and we were like, it's really confusing that we look back and we think that it was okay to do a 1% public sale and keep 99% of the token at that time. Like it was just wild. And he was like, yeah, of course it was a great idea, because we needed something to sell and we needed something to power the Ripple company. And to him, it made all the sense in the world. And we kind of left being like, who is the underlying owner of this stuff? Like who wants to hold that? But it turns out that, at least back then we were wrong and he was right. And apparently thousands and thousands and thousands of people wanted to hold it. So I think that dynamic is definitely shifted since 16, 17 era. And I think it's shifted for the better. I'm at risk of saying that the market is maturing in a way that people are starting to realize that actually, there are some tokens which are memes and that's fine and you can play that game. And then there are some which might be, reasonably valuable moving forward, or reasonably connected to the business that they're being part of. So that's at least a nuance that I'm seeing. But is that, like, from the investor side, are you seeing any of those conversations? Are you seeing anyone that's coming to you that's saying they want to go back to the Ripple days and do a 1% launch or a 99% treasury allocation?
No, I haven't seen that. I think that, thankfully kind of fell by the wayside. Yeah, I think it's like, okay, I'm trying to think. I haven't seen that in a long time. I don't think it ever really made sense. I never thought it made sense at the time, I think. But typically you kind of see the classic, like half is for team, investors, foundation, et cetera, and then half is kind of given away at some way, shape, or form, whether it's airdrops or partners or token network rewards or whatever it is. Yeah.
Yeah, I think my view is like everything is a meme, right? Like, and I don't say this in like a nihilistic way. Like, I just think like memes are just how the world works, and so every token is definitionally a meme. It's just a question of like what type of meme is it, right? Like Ripple is an early meme and like an early thing that people were just figuring out, and they could kind of, there's a lot of different ways that can play out, and it's worked out really well for them because it's turned into this very powerful meme with like financial, I don't want to say alignment because I think there's like a misalignment, but there's like something there that's allowed it to work. Like if Ripple were a normal company, it would have gone bankrupt a long time ago. Like it doesn't produce any value for the world, right? But it produces a mimetic value. Again, like it's arguable whether that's a good thing or not, but like it unquestionably, like the world continues to buy this mimetic value from them, and it allows them to kind of continue to exist. It's quite a strange phenomenon. Like I think it's like a new thing that's like never really existed before that. Like maybe like in some kind of entertainment form or something, right? Like it's more of an art project or something than it is a company, right? Like it's quite strange.
Yeah, that's crazy. We definitely don't see that many of those things anymore. We're kind of folding into this this meta where most of the new launches, most of the products kind of look the same from the beginning. As you said, Joe, you kind of get this typical allocation where the team keeps some, there's some aligned for incentives, and then the rest either go to strategic investors or something like that. What would you say, and even from your angel investing, Kain, what would you say is like, what's a good structure? What gets you the right kind of alignment from, number one, the founder, whether they're first time or not, but also number two, from the project? Like, is there anything that completely puts you off, that says you see a tokenomics page in front of you and you're like, actually, it's never going to work, and that's a horrible design?
I mean, I think the biggest one is just like, you know, any project, like you always want the team and founders to be in the same boat as the investors. Um, and you'd be surprised how many times over the years I've been pitched a structure that doesn't match to that. Whether it's like, the weirdest I've seen is like where there's like two tokens and the investors get one token, and you know the team also gets both tokens, and it's like, why would I want to buy that? Like, we're not in the same boat. The same thing is true. You know, it's not just me too. Like the people in the public markets after the fact, like they're going to have this concern too. Um, that's probably the biggest one. I think outside of that, um, you know, I'm trying to think anything else. Um, I don't know. I mean, obviously you always see a million weird things as an investor over the years, and so it's sort of probably forgotten too
I
many
think
to even remember here. But
like
yeah,
probably
vesting too.
like weird vesting things. You know, and again, like I think as like an angel, I don't have market power, right? Like I'm not leading these rounds, so I don't have the ability to negotiate. My only leverage, if anything, is like, you know, if I'm going to be a significant angel in the round, I can kind of advise the project of like why this is not a good idea, right? Like, you know, they might not have realized, you know, what the downside is, or they may never have seen it, you know, especially if you're a first time founder and you're like, this seems like a good idea. And it's like, it does, but actually it's going to kill us all. So like, let's not do this, like, you know, kind of try and push them in the right direction. But yeah, weird vesting terms are always like a little bit of an eyebrow raiser. I'm like, okay, what alignment are we trying to achieve here? You know, like, especially the ones where it's like, okay, it's 2 weeks linear vesting and then unlock, and I'm like, you're saying the word vesting just to like have checked a box, but like 2 weeks is not a very long amount of time, guys. Like what's happening in that 2 weeks that's going to make a difference, right? So there's things like that where it's like, you know, clearly like a sort of exercise in checking a box to be like, yeah, we have token vesting. It lasts until next Tuesday, and then you know, from there everyone's in the same boat, right? So. So yeah, I don't know. Like on one hand, I'm like, I really want to see more experimentation, but I think on the other hand, you know, like weird experiments unfortunately can be a bit of a hint of like adverse selection, right? Like there's a bit of like, why are you experimenting in a direction of the team having liquidity much faster than is common, I guess, right? Like that, you know, again, it just raises eyebrows, right? Like, you know, walk me through your logic here. Like, what's happening next Tuesday? Why are we all liquid next Tuesday? So,
and, sorry, you go, Jay.
Well, all I was gonna say is one thing that I do actually like that I think makes sense is, you know, when projects sometimes do the thing where vesting happens in like more discrete chunks. I think Solana actually did this well, where it's like, you know, I forget the exact schedule, but like if you envision, you know, as an investor, this the selection between like say quarterly vesting or block by block or something, I think like quarterly is much better, because whether you're a public markets investor, you know, a hedge fund, retail trader, high net worth individual, whatever you may be, or whether you're a private investor, I think it's actually better for both, because the market can kind of align around these liquidity events, versus like if there's just constant selling. Like I felt this personally when I bought tokens on the public market, you know, with the ones that have a concrete unlock day, I'll sort of buy a little bit after the unlock because it's like, a decent amount of selling pressure is gone. Versus if it's block by block, I'm just like, forget about it. Like, maybe I'll show up in 2 years and it'll be a fair price, or maybe I missed the boat, but it's hard to say. So that's one thing that I do kind of like, that I've seen people take different approaches on.
Yeah, I think one like the one that always comes to mind for me is like Curve, right? Where like the emissions go for like 100 years. They were like aping Bitcoin. I think like Michael like got to like, I mean, we all do it every once in a while. We're like, let's do the Bitcoin thing. And so like Curve emissions go for like, 120 years or something. And it's like, okay, so it's block by block for 120 years. Like that's gonna be dark. Like at what point does someone turn up and they're like, all right, like 2087, I'm in. That's where that's my line. Like once we cross 80% emissions, I'm all in. We'll be 100 years old. Yeah, I think that's interesting because so Andrew Kang had an interesting tweet. I don't know if you saw it yesterday, where he was like something along the lines of like, just let's not have any vesting at all, right? Like just like let the market sort it out, right? Like sell all the tokens, make them all liquid, and just like see what happens. Have price discovery, accelerate price discovery. And it was funny. I was in a group and like a couple of people were like, well, I've seen this guy nuke like a lot of charts, so like I can see why he's like, is there any way that we can speed this process up for me? But I also was like, I have a bias, I guess, towards markets, right? And I know you do as well, Joey. Like, do you think that there is something in that of like just let the market sort it out straight away?
Yeah, I mean, I think there's some element of that works to some degree. Like if you look at like, well, I think there's if you look at something like, obviously the classic one is like Ethereum. I think the team might have had some vested, I forget, but the large investor base obviously didn't, and it was a brutal first year or whatever. Very choppy, but also provided some great buy opportunities
A
for
great
long term
year. I
minded.
mean, yeah, in hindsight, it was a great year, right?
Yeah,
Yeah.
and then also like there's no longer this kind of thing about like you didn't have to think about the calculus of like how much vesting is there going to be or how many unlocks are there going to be. If you look at public markets too, usually within a number of months to about a year post IPO, there's a good amount of liquidity. Like it's not like the majority is still vesting or something. And sometimes these tech stocks when they IPO, there is a brutal chart the first year, but then it kind of has a free market price and you can buy in. And one, that's how you get like investors who love the company and have amazing returns. Like if Tesla hadn't seen the bad years early on, like it wouldn't have had such a massive fan base on the retail investor side. And So I think it's sort of actually valuable for a couple of reasons. One is price discovery. Two is like people being able to actually buy and get along for the ride. Versus if you have this steady vest thing, you kind of have this weird dynamic where as an investor or trader, you kind of always feel like the asset is a bit overvalued. It's a lot harder to pull the trigger because the market price isn't really a true market price. And then it also like it also leads to scenarios where I think investors feel like they need to sell more than they otherwise would have. And so the thing I'll kind of walk through as an example is if you just think of the game theory, if every single investor, say you have some token that vests over a number of months, and every investor is vesting, at the same time the first month, the game theory of it is like those people are going to sell. And so some investors, depends on what type of fund structure they have, maybe the venture funds will hold longer, but like the hedge funds, like um, it'd be against your fiduciary duty if you didn't sell some of it, right? Because you want to take some chips off the table. It's rational and it makes sense, and it's a good smart thing to do as an investor. Versus like if it was just all liquid up front. Obviously, there's some drawbacks to that. I'm not going to deny that, but you'd have a different conversation like around your investment committee because the game theory thing is different. It's basically like how much of this position do we want to take chips off, and then how much do we just want to hold sort of indefinitely until we think it actually maximizes its value. And so you get, obviously there's drawbacks, but the upside is you get really immediate real price discovery. And you also, I would argue, and it's hard to like prove this, but I'd argue in some cases you actually result in net less selling pressure over a given time window than you would otherwise, because game theory doesn't force you to sell like it does in other scenarios.
Yeah, if you believe it's overvalued, or it's like just empirically obviously overvalued, right? Like something's trading at a 20 bill FDV, like can it grow into that in 3 years? Sure, but like it's just forcing you to sell because you're like this fair value here is like 2 billion and it's trading at 20 for reasons, right? Like structural market reasons, and then you get a down only chart. So I think like coming from traditional startup land, right? Like there's this dynamic when you're raising capital around dilution, right? You start off and you own 100% of the company. Like that's the traditional way. And I think in some ways in tokens we kind of change some rules that maybe like and again this is where I come back to like I'm reconsidering all of my ideas that I've accumulated over my crypto career, but like you start off with like one or two or three people owning 100% of the company, and there's a very clear dynamic between the people in the company and outside investors around dilution, right? Like the higher you can push the val, and so you're negotiating, and there's like in theory a fairly efficient market, although obviously there's not that many participants, but like you're playing against people who are multi-round actors in this game, and they know how to value things like to some extent, and you like obviously you have the WeWorks every once in a while, right? But like in general, the people are fairly good at like pricing rounds, and so there's this dynamic of like, okay, we're gonna raise X at Y, right? Like $1 million at 10, and then we're gonna raise, but no one has any liquidity. So you don't need to worry about alignment, right? Like it's literally just a game of like how much dilution are you taking to continually fund the growth in the company. In tokens, like the problem is that, at least in my mind, is that like you have instant liquidity, and the only thing that's going to stop you from selling, arguably, as a founder, is if you believe that things underpriced, which is like 0% of the time in crypto, right? Like there's very few things that are underpriced. Like Ethereum at $2, right, was underpriced. Like no, Vitalik didn't sell, right? Like a bunch, Lubin didn't sell. Right. Like a lot of people. In fact, a lot of people were buying because they were like, I see the path to success here, right? At $5, whatever, and so I feel like if we got to an environment where everything were liquid straight away, and even the team was unlocked, like everyone was unlocked, the only way that works is if everyone believes that it's underpriced. And I just don't know how we get there because of token liquidity. Like there's this liquidity premium that tokens seem to attract. So I just don't know how price discovery works. Like I'm sure there must be a dynamic or way to create it, but like I can't see my way through that problem. Like, if you and I have a token that we've just launched, and we think it's worth 100 million and it's trading at $1 billion, to your point, like you have a fiduciary duty to yourself to like take some off the table if it's liquid, right? Like, there's just a weird misalignment there.
Yeah, I mean, I think the counter argument, and it's like sort of a TBD thing, and how true this would be in practice. I think the counter argument might be that if it were more like an IPO where you had like a lot of liquidity, 6 months or a year, whatever the lockup period is out, the price would be kind of inefficient up until that point. But then once there's all this liquidity, the price would correct down a lot. And then there's this sort of dynamic where like it might actually make sense to hold. And then I think the other thing that's like interesting about it is like it's not as if say you have this really big unlock. I don't think it'd actually be the case that like the founders of the protocol or company or whatever, or the investors would actually be able to sell that much during the unlock. Like I think the market makers would just move their bids way down in the same way that like if a stock has like really bad earnings and the price goes down 50%. I mean, there's some amount of the order book that gets eaten up, but it moves, the bids and the market makers move down really, really fast. And so it's not like you can sell, $1 billion worth at some high price. And so I think you probably have something like that happen. And then I think that that could fix a lot of it's not like a cure all, but I think it could fix a lot of the problems with the market structure where like as an investor, sort of, I guess another way of phrasing it is I'm not sure either of us necessarily have the right answer, but do think it's probably safe to say that the market structure is currently kind of broken in the sense that it's like not an efficient market structure.
Agreed. That I think there's I definitely agree with that. I mean, we have an ability to create broken market structures in crypto that's like pretty incredible, right? Like even something like pump.fun. There's an argument that like this is super efficient because there's price discovery happening in real time, and yet there's like ways for insiders to manipulate the market and do things that that create like weird dynamics that are actually hard problems to solve. Like it's actually a hard problem to create an efficient market in an open and transparent platform that's permissionless because people can come in. I get this. I'm probably going to get killed for saying this, but like that's an argument almost for like some kind of regulatory. There's like I can see how a regulator would be like, well, that needs to be regulated, right? That's what's broken about it is that like people are able to go in and do nefarious things, and it's like opaque as to who's doing stuff, right? I guess I have a belief that like we can fix those things, and people are working on it. I mean, back in the day, ICOs solved this problem by like just doing price discovery around the ICO itself. Or like LBPs also did this. It was like, hey, I've got a thing, PA Aquarium or whatever, right? Like one of my favorite ICO ever. The guys that were going to build like giant aquariums around the world. They had like
I don't remember that one.
Oh my god, it was my favorite. So they had a deck where they just had like mocked up aquariums in like there was like an aquarium in like the Grand Canyon, right? And it was like we're going to go and build aquariums around. It might have even been like a joke. I don't even know. I think I've got the deck somewhere. But like it was just like aquariums in different places, like a giant aquarium in Singapore, like bigger than the actual aquarium in Singapore. Like it was like a quarter of the city size. It was like an aquarium, and it's like we're gonna go and build aquariums everywhere. But like, okay, what is that worth? Like let the market figure it out, right? I think they only raised like a couple $100,000, right? The world didn't buy that one, but like something like Polkadot or Gnosis or something, right? Like the world said, okay, this thing's worth $100 million, and like price discovery sort of happened. There was like an auction mechanism or a Dutch auction or some multi-round sealed bid auction system, and of course when it's when there's FOMO in the air, things are probably priced higher than they should be, but arguably like that kind of tends to balance itself out. So I feel like letting price discovery happen is like one of the things, which again, unfortunately, we can't do when you're doing private rounds or actually, I mean, you probably have some insight into this. Like someone turns up to you and says, I'm raising at a 50 billion FDV for my seed round, raising 5 mil or whatever. Do you feel like you have genuine like market like leverage or market power there in being able to negotiate with them, or is it just like if you say no, they're going to go to someone else, and if it's a good project, you kind of have to suck it up and pay the price?
Yeah, I think we have real market power in the standpoint that like I think if you think about like the way founders fund prices things, and it might be different across other VC funds, but for us, we sort of think like what is the sort of fair value here and what's this actually worth? And then, we don't do the whole kind of like ping pong negotiation back a million times back and forth, like you're, bartering in a market or whatever. We kind of just offer, our sort of best fair offer that we think is fair. And then, sort of if the founders on the other side are, there and that makes sense, or if there's like some slight tweak that we need to make to the offer or whatever to make it work, then we can try to do that to make it work. But but I'd say like we definitely invested in a lot of stuff where like team and company came to us and initially wanted to raise at some price, and and we paid a meaningful amount less or whatever, just because like that's what we actually thought fair value was, and we kind of explained the logic. And I think for us that works because of the fact that we also we're not trying to buy like 20% of the protocol or the company or whatever. I think if you're trying to play that game as an investor, then it's sort of like then it becomes much more of a price sensitive thing. Because like if you think about like FF as an example, if you can get us in, we can get sort of our ownership target. we can generally like add way more value, for a bunch of different reasons than whatever marginal dilution you took on at the price that we invested. Versus like if you're just one of those massive funds that has an insane amount of capital and has to deploy it, you have to deploy it all into crypto, and you have like a really high ownership target. Then I think those ones become a lot more bidding wars, and it's sort of like the founder comes to you with a price, and it's sort of like binary, you take it or you don't, or if you don't, and Andreessen takes it or whatever. So it depends. It depends. Everyone has a different strategy as an investor, and so it's sort of the long answer is it depends. But I think so. I think that's sort of part of it, and then I think sometimes though, if we're like too far apart, I'll just tell the founder, hey, like I think we're probably too far apart on price here, and like I don't want to make you a defensive offer. So, if you end up changing the price you want to raise at, come back to me. If not, maybe the next round will be a better risk reward because there's obviously a lot of stuff we've invested in over the years where like the company hits a certain milestone and then the valuation's actually higher, but on a like risk adjusted basis, it's actually a much better investment, even at a higher price.
Positive EV. Yeah, makes sense. Do you feel like this has come off a little bit, right? But earlier in the year, slash last year, right? Like there were some interesting bidding wars, and again, I get like a kind of seat at the kids' table to just like watch this happening, right? Because like someone comes to me and they're like, "Here's my deck," and then all of a sudden it's the FDV went up by $1 billion because of reasons, right? Because like people are bidding it up, right? And it's like, wait, what? Like I remember I did one where I was actually acting as like a sort of vouching for the fund, right? To be like, hey, like they've worked with me, they were really helpful, whatever. And like the bid was like X billion, and then all of a sudden it went up like 2X, and I was like, I was like, what happened there? And like just there was an element though, I felt like at the time that was a little mercenary, or like a little a little bit just kind of playing the game, where it was like, yeah, whatever, it doesn't matter if we bid it up from $1 billion to $3 billion because it's going to launch at a 20 bill FDV because of this low float meta, right? And so it's like we're going to actually be fine, even though that's not sustainable. Like obviously that's not long-term sustainable, but like how much do you feel like that plays into it, where people are just like YOLO, low float, let's see what happens?
Yeah, I mean, it definitely plays into the way, certain people price things. I don't think it makes any sense. Like, my logic is always like when I'm talking to founders is like, you know, we hold like we hold things for a very long time, right? Like we still own a ton of SpaceX, and SpaceX was founded like a long time ago, and um, and so you have to think about like what is something going to be worth in sort of like you know terminal kind of cash flow state long term, um, and so then when you think about that, you think about like after all this stuff vests, maybe you invest it, say it launches in a couple of years and it vests over 4 years. You're talking 6-7 years. It's, in some cases, whatever FTV it launched at, like is almost irrelevant to what your actual return is. And so yeah, when I see people price stuff like that, like it doesn't make sense. It doesn't make sense for the investor. It doesn't make sense for the founders either. Like they're just gonna, in many cases, end up disappointing people. Um, if it's the one like, you know, 20 billion plus outcome every X number of years, then I guess in those scenarios it can work out. But you wouldn't want to base it off of like what you think the initial launch, FDV is going to be or whatever. I think I also think like the flip side, of this is like if you price things, in a fair manner, you kind of get a reputation for pricing stuff in a fair manner. Like I remember when we were investing, summer of 2023, I think some of our offers were probably like higher maybe than what other firms would have paid, was just what we thought was fair. And now a lot of those same firms are talking to the same companies, and they're paying many, many, many multiples higher because the market's moved up or whatever. And I think like but if you kind of approach it with like a steady hand, I think it's actually better as an investor and better for the
Right, like
founder
trying to
too.
like tamp down the volatility of the cycles, right? Like have that long view and be like,
Yeah.
look, in 2021 I would have priced this at 50, so I'm going to price it at 50 today in 2023, even though it's a bear market. I'm not going to, try and scalp an extra whatever, 30% off the founder and just say, like, this is a thing that we price at 50 all day, like, for, reasons.
I think, like, because if you just look at, I mean, obviously you want to look at public markets some just to get an idea for certain things, but like you also have to know when public markets are crazy in one direction or the other. Um,
Yeah.
like private, growth stage tech companies, they didn't fall as much as the public companies did in terms of valuation, in the bear market. And then if you look at crypto, like if you're investing in a file, storage competitor network to Filecoin, you wouldn't have wanted to do that when Filecoin was like, a multi-$100 billion network. Like that wouldn't have made sense. Like as an investor,
Yeah.
if you're never willing to come out as an investor and say, actually, I think the market's wrong and I'm going to do this contrarian thing, then it's sort of like you should just buy, crypto. You should just buy Bitcoin and equities. You should just buy
Just
the
ride it
Nasdaq and the
out.
S&P and call it a day and stop investing. Like you have to be willing to, you know, say that the market is wrong sometimes. I think.
Yeah, fair.
Yeah.
That makes sense.
So I know we've got about 5 minutes left, so it would be amiss of us not to talk about one of the biggest events coming up, the US election, where you have one party that is waving our flag and another party that historically has wanted to kill us. Where
Also
do you...
now waving our flag, right? Like
Yeah, but now changing its tune.
But it's totally fine now. It's fine. It's all fine. Everyone loves
Exactly.
crypto now. It's all good.
Exactly. Everyone needs the what, 70 or...
It's just a
50 or
smaller
70
flag.
million
It's a
flags.
slightly small. It's like one of the mini flags. Like one person's got the big like 50-foot flag off the back of the F-150 truck, and the other one's waving a little mini flag. It's basically the same thing.
In a Prius, yeah, in a Prius.
Yeah.
So where does that put us? Because usually the market finds an excuse to fulfill its cycle prophecy. Is this just going to be one of the other excuses? Is it actually going to make an impact? I know that we lightly spoke about this in Singapore. I'll start with you, Joey, and then I'll come back to you, Kain.
Yeah. I mean, I think my view is, regardless of what happens, it's much better than the status quo. I think the Biden administration was very, very friendly with Elizabeth Warren. Um, from what I can tell, sort of, based on reading kind of the DC gossip, it doesn't sound like Kamala and Warren are too close of friends. So like these tiny like little rivalry things actually like matter a lot. It's kind of stupid, but what they do. Um, and so I think you have that element. I also think you do have finally big Democrats like Chuck Schumer and stuff coming out and saying that they will sign like um, a pro crypto bill, and sort of there's one that Coinbase has been talking about since like May. I think he seems like he's up for signing that. From my understanding, just from like what I've read publicly, is like he hasn't brought it to a vote in the Senate because Biden has stated that he'll veto stuff like that. Um, but I think Kamala probably wouldn't. And then I think the second thing I'd say is I still think Trump is way, way better for crypto than Kamala, just because it's sort of like, if you imagine like free markets and you have one candidate who's kind of like, well, like we shouldn't ban the free market. There's a lot of things I don't like about capitalism. The market kind of sucks in many ways, but like we should still allow it. That's sort of the Democrat view, in my opinion. And the Republican view, sort of like free markets are great. Everything should be a free market. We should encourage the free market to flourish and not get in its way. And obviously, like I think you just have to be lying to yourself to not admit that one of those is better for financial markets and one of those is better for crypto. And it's the Republican side, right? And I do think poly market's right, and I think Trump probably wins. I said this like a year ago, after RFK announced that he was running. I was like, okay, Trump's going to win. And I still think it, and so I think, yeah, that'll definitely be weaved into the cycle narrative. I think it'll also just like open up a lot of. Um, Someone said this on Twitter. It's not my idea, but I agree with it. Which is like a lot of the meme coin stuff kind of feels like stuff people are doing because it's the cool stuff kind of feels like the government might harass you and threaten to throw you in jail if you do the cool DeFi stuff, and like that's actually real. I know multiple people who've done nothing that would actually warrant jail. Like even legally, there's no credible argument for them being in jail, but the government kind of goes to you and says, "Hey, we think that you're doing this illegal thing." even though our agency doesn't actually have the authority to throw you in jail, like statute wise, they literally don't have the legal authority to do that. We're going to threaten you unless you sign this settlement. You're going to go to jail, and like that's just not going to happen under a Republican administration. Like no chance. All those people who did that bullshit are going to get fired. And like I think that would be a good outcome for crypto. Like those people should definitely be fired. No one should hire them. Like if you find with those people and they're like, working at like a big law firm and they're offering to advise you, like tell them to go, like tell them no.
Yeah.
Like they're just
Yeah.
bad. Like they're like sometimes stuff isn't binary and sometimes it is. I think like those people are actually just bad people. Like it's not a binary. It's not a gray area. They're actually just bad. Like there's something
Yeah,
wrong with them
agreed.
to want to throw like like a 22-year-old like computer science student who's working on like some crypto thing that's like beneficial for the world in jail. And so that's sort of my view on the election. I think either way.
Or even not, right? Like this is the worst thing. It's like even if you disagree with what they're building, like threatening someone with violence, right? Like having like some goons with guns show up and be like, we're gonna throw you in jail unless you sign away your life. Like that's insane. Like that's like
It's crazy.
it's crazy. Like and like people. I think one of the other interesting things that's going to be interesting if Trump does get in is like some of the crazy shit that's happened over the last 4 years will come out. And I think one reason why people are let's call insiders, right, are like a lot of insiders are far more skeptical of the Democrats right now is like I know about stuff that's happened to portfolio companies and like friends of mine, and some of the tactical things that that people have been using, like on the regulatory side, to basically like create these chilling effects, right? Like I've heard it anecdotally, I've heard it directly from founders who've dealt with it, and that stuff's all going to come out. Like it always comes out, and it's just people are going to be like their minds are going to be blown when they hear about all the crazy stuff that's been happening right over the last 4 years. It's insane, and so yeah, like I agree. Like the people who've been carrying out those campaigns, they're pieces of shit. Like they absolutely should be fired, and they need to be carted out. So yeah, I think that will shift. I mean, like here's an interesting personal anecdote, right? I love New York. I'm a big fan. I think that there's a lot of great projects there. The last I heard, I probably shouldn't even say this out loud, but the last I heard, there was a fund that's in New York that's like taken a canvas of like who's actually there. There's like 400 senior leaders of projects in New York, like senior leadership of major projects. There's like 400 people that are like in New York right now, and I would love to have a Infinex office in New York. But it's just not tenable under the current administration. That'd be like the dumbest thing that we could possibly do is set up an office in New York for Infinex, for all kinds of reasons. But like, it would be the greatest place to have an office, right? Like, there's like so many talented people there. It's so connected to like financial markets. Like, there's a whole bunch of reasons why having boots on the ground in the U.S. and particularly in New York would be super valuable, for a company that's trying to like do consumer finance, but it's just you can't do it. You like literally cannot do it right now. Whereas I feel like in a Trump administration it gets a little bit easier. Like obviously New York's still very Democrat driven, and there's a little bit of animosity there. We've dealt with the bit license and other weird stuff, but like I think that it would get better. Like it would be fine enough that you're like, okay, the state regulators probably aren't gonna like roll me up and throw me in jail if like the federal regulators are tolerating my my industry. So that I think, and like we'll just see a proliferation of like people moving back to the US, or like coming out as actually being in the US when they're pretending like they're not, and there's going to be a whole bunch of stuff like that is going to be super bullish for the US crypto scene, I think, if Trump gets in. So we'll see.
Awesome. Okay. Well, thank you so much. We're on the time here, Joey. Really appreciate you making it. Looking forward to seeing you in person in DevCon, and would love to have you back on. Hopefully, we can do this in a couple of months in a podcast studio when Kain and I do our US tour.
Awesome. Yeah, that'd be great. Thanks for having me on.
Amazing. Thanks, Troy.
Cheers.